why this housing market is not a bubble that's ready to burst like the early 2000s. Homeownership has become a major element in achieving America's dream. A recent report stated 86% of the people agree or find that owning a home is America's dream. Prior to the 1950s, less than half the people in the United States owned a home. However, after World War II and vets returning home and the GI Bill, how people purchase a home, and now the percentage of home ownership is at 65.5%. So as you can see, there's a strong desire for home ownership and growing your own wealth and equity through owning a home. So if you're to look at some of the charts since 1945 to now, you'd see it's pretty much gradual increase of home ownership and price appreciation as well since World War II. So let's take a step back and what caused the crash about 15 years ago? Well, we had a ton of foreclosures around 2006 and a few years thereafter that drove down values dramatically for a period of time. And the reason were a couple different things. Number one, many purchasers were not truly qualified for that property that they bought for the mortgage that they got. So example, stated income, stated asset loans, where people just had to state their income and asset, and if they had decent credit or qualified based upon credit, they pretty much got a loan. Or the no income, no asset program. Again, very similar to stated income, stated asset, where you could get a home loan and truly did not qualify for that property, but the information you provided made you qualify. Also, another reason why there was a lot of foreclosures were a number of homeowners cashed in their equity, used their house as an ATM, leveraged their house to the highest possible, and then when prices dropped, they either had no equity or negative equity and underwater. So therefore, what was their option is to keep paying on a house that's worth less than what they're owing on it, or maybe walk away and start over in a few years after that, you meet the time frame of a foreclosure or a short sale. So that caused people to abandon their properties as well. However, things are different today. And the reason why I say that is we have more restrictive programs today where you have to provide more documentation than before and more guidelines in place to avoid what we saw in 2006 through 2008, 2010, in that range. So the products and programs are not nearly as aggressive as they used to be. Not only that, the amount of equity people have in their house today is pretty much at an all-time high. A recent survey came out saying that 41% of the homeowners in today's market have at least 50% equity. So you can see there's tremendous amounts of equity in properties today than there was 15 years ago. Also, people are just not using their homes as an ATM as they had in the past. So we're not leveraging our property to the maximum loan to value. And we're being more cautious on how we're using our equity. So my opinion is, the major reason for the crash 15 years ago in the foreclosures was because of some of the policies we had, products and programs, and maxed out equity. And now we have more stricter mortgage standards and historic level of equity in properties. So I don't foresee we're going to have a massive housing bubble or a foreclosure tsunami coming in anytime soon. If you have any questions or like to talk further about this, please reach out. We'd love to have a conversation. Thank you.